Okay, thanks for coming along, everybody. And can you hear me okay? Is the sound all right? Quick sound check and then we'll get going. Great. Okay, so what we're going to talk about is Bitcoin. And we're going to look at alternative ways of trading as well on the indices like the Dow and the DAX, the German DAX, and potential big moves on Forex. But the main emphasis is going to be in Bitcoin and the Dow. Those are going to be the two main focus points. So I'm going to talk about what I think is going to happen in 2018, how you can trade that, depending on whether you are trading part-time, maybe you've got a full-time job. There are easy ways of trading this if you've got a full-time job and you can only look at your screen or look at your charts for, say, 30 minutes, 60 minutes a day. Otherwise, if you're looking to part-time trade this, you only need 1 to 2 hours a day to trade this. And then, so the whole idea is to look at how Bitcoin is moving, what it's all about, where it could potentially go, and how you can trade it, how you can engage this market and make money out of it. All right, so can you just type in the room if you are already trading Bitcoin or indices, or if you're just looking to start trading? Let's just see how many beginners and how many experienced. Okay. Right, let's move on then. So, like I said, we're going to talk about strategies, trade ideas if you've got a full-time job, and trade ideas for if you are looking at this. You've got a bit more time, maybe you've got a part-time job and you can afford more time to spend on this. Okay, so let's just go out of that for a second. So this is Bitcoin on a daily chart. Now, I thought this website was interesting. Let me just grab this. If I can just pull this over. For some reason, it's not letting me do it. Here we go. This is the volume of the trading volume on the different currencies, different cryptocurrencies. So Bitcoin is way up here at 8.6 trillion a day, and Ethereum is well and truly about a quarter of that, and Ripple is catching up. Ripple is something that some banks have set up, and Bitcoin Cash and Litecoin. Litecoin is okay. Litecoin is not bad. Anyway, so it's a Bitcoin futures market, which has now got the CME behind it, the old Chicago Board of Exchange behind it, is going great guns. So that's good for us, for anybody who wants to trade this, because I think that means it's potentially more technical. So, okay, let's talk about let's talk about some tools that you can use to trade this. And the best way of trading it is to really make sure that you really have got the analysis on your daily chart clued up. And so what kind of tools could you use to trade this? Well, you could use some simple moving averages. There's a 200-day moving average. So for those of you who have not been technically trained, this is showing you the average over a 200-day period, and this is a key. This is the slowest moving averages, the slow moving average that is commonly used, and this is a real indication of the very long-term trend. And the mother of all moving averages, the one that is most commonly used, is this 50-day moving average. I think moving averages are useful, but I think I treat them as a sort of a guide rope. I don't treat them as hard and fast rules to get in and out of a trade. But you can see instantly just by putting up a daily chart and sticking on these two moving averages that we were hovering around this 50-day moving average here, dipped underneath it and quickly got back into it in '07, and then marched our way up here very, very slowly. I remember talking, I had a techie friend who was trading this, who was mining it back here. So I lost contact with him. So I hope he held on to it, because this is an incredible run. So the key point for this is once we dipped underneath it and came back up, that was a crucial period in the life of Bitcoin. And then once we blasted up, the dip, the pullback gets bought. And then we start this incredible journey to the upside. And it's a bubble. It's clearly a bubble in trader terms, because it shot up with very, very shallow pullbacks. And normally, the normal behavior in a market is a wave pattern. 1, 2, 3, 4, 5. A 5-wave pattern followed by a 3-wave correction. This just did, once we did this little pullback here, we got a couple of little periods of hesitation, but on the whole, we pretty much went straight up. And that's not sort of normal market conditions. That's just bubble territory, and we've come crashing down. So, if you are one of these people that believes that Bitcoin is a fad and it's not going to last, then what would you do with this? You know, how can you get in this? If you get in this at the wrong point, you're going to waste a lot of money trading this. I think a lot of people probably got burnt on this, probably got caught up in all the hype, and then struggled to really make anything out of this. So the tools that I use is because I think markets move in nice, simple waves. The tools that I use are this. Good old Fibonacci. So if I put this tool on this range, so this is the area I'm looking at, this high up here and this low. So the low from November 17 and the high in 15th of December. You can see that once we got this little red hesitant signal up here, we did pretty much a lovely crash. So just as it went straight up from this point to that point, then once we get a hesitation, that's it. The main market makers just pull the plug. And within, markets come down about 3 times faster than they go up. So this move took, it's not quite the rule in this case, that took from 3rd of December to 15th of December, incredible moves. And then the main drop was 17th of December to the 22nd. So pretty similar times in this case. It's about took about 30% less time to drop than it did to move up. So the basic 3-to-1 rule wasn't applied to this. But once this broke down here, this sort of, the market lost faith. To me, the market lost faith in Bitcoin. And so once we pushed up into a resistance area, I'm basically suggesting you treat Bitcoin as a pure technical market and you apply technical analysis to this. I think it's a fad because it's not What is Bitcoin? It's not widely used. It's not accepted by huge economies and in the world. Philippines and China, for example, have blocked it. It's not accepted. How can you use Bitcoin? How can you physically use it? In a lot of cases, you can't. So I think, and from a pure technical point of view, I think it's a fad because this was such a big blow up. Any market that blows up goes up in multiples rather than traditional waves. To me, is good question. In 5 to 10 years, will they exist? I think they will, but I think, and they could ultimately take over. But I just think there's a very rocky period and a heck of a lot of manoeuvring before they become accepted. The reason is, if you are a central bank, like the American Federal Bank, the Fed, and you've got a cryptocurrency, whether it's Bitcoin, Ethereum, whatever, you've got a currency coming in, you can't control that. I mean, one of the reasons why the US is so successful in coming out of the 07-08 crash, and the 07-08 crash was horrendous. At one stage, you had bankers pulling out their cards from their wallets and emptying their accounts because they thought that the market was in complete meltdown. It was absolutely horrendous. It was a complete bloodbath with major brokers going under. So, and the reason why they were able to turn the economy around is because they could manipulate the currency. They had control over the currency. They could manipulate it, flood the market with dollars, cheapen have an expansive stimulus policy, and turn the economy around. If you've got Bitcoin, particularly if Bitcoin really takes control, central banks that are going to operate in different levels of economic activity around the world are not going to have any control over their currency. So it could create absolute mayhem. We could really see a meltdown if Bitcoin really takes control. But I think it's here to stay. I just don't think it's going to be, or if it is going to become a mainstay currency and a mainstay market, it's got a heck of a lot of hoops to jump through. But in the main, it's just something that, for me, it's just something a geek set up. It caught the public imagination, got fueled up with a lot of hype, incredible amounts of hype. The story spread around the globe like wildfire, and the whole thing got out of control. So in normal technical movements, you've got a market that's gone up way too fast for its own good, crashed down, and as soon as it pulled back into a sell zone, started the next legs down. Here, to me, this is normal behaviour from a bubble. You go back to the base. It didn't quite go back to the base. It fell short. So where do we go from here? So we'll talk about the bigger picture first, then we'll talk about how you can trade it, how I think you can trade it. So, okay, so we had this. This is the major trend line now. So if Bitcoin comes up against 12,000, 12,500 and puts in a sell signal here, like this sell signal up here, I think this could easily come all the way back down to here, back down to this level at 1575. If we look at this on a weekly time frame, there's your weekly signal. If you've got a new high in a range, and you get an immediate close below, as we did here on the week beginning 18th September, that's a sell signal. So so as that moved back into halfway around that bar, so this was the sell signal. They moved it 50% into that bar and then did the drop. And the drop took 1, 2, 3, 4, 5 weeks, whereas this took 1, 2, 3, 4, 5, 6, 7. 7 weeks to go up, 5 weeks to come down. So where do we go from here? 10,000 today. Will it rise today? I think that here we are Thursday. So we finish the week tomorrow. This bar. Oh, sorry about that. This bar closes tomorrow. If this bar closes above here, 93.80, I think we stand a decent. That's a buy signal, because this is the downturn. If we then see an immediate, this is the end of the potential end of the run. If this closes above this one, that's a buy signal. Just as that was a sell signal on the week beginning 18th of December, this is a potential buy signal if that closes up here on this weekly chart. So if that is then, if that's triggered long, then we need to drill down to a smaller time frame to see if we can pick up an area that we can buy in. So if we drill down to a, okay, so this is, so this is the daily chart here. So we had this little run to the downside here, then spent a couple of days, well, we got higher close. It didn't engulf the previous day's bar, so that wasn't a buy signal. It certainly was one of the better up days that it had in quite a long while. That was the best up day it had since 19th of January on the 6th of Feb. So that started this push higher. So if we now close above, if we hold this area here into the weekend, that 91.40 is potentially the buy area for next week, potentially 91.40, because this was resistance, close up here, this is now support. So 91.40 is potentially a weekly pivot into the next week to buy, to see if we can then reach the next level up, which will be 10,800. But bigger picture, I would suggest the bigger picture is if we get to that resistance point up there at 12,000, markets love big numbers. So I think the chances of that getting to 12,000 is quite high if we close well this week. And then I think we can get to 12,000. At that point, if we can't break, open and close above 12,000, this could just roll over. So how can you trade that if you're a part-time trader? Maybe you work full-time, and you can only look at this for an hour or two, or maybe in 30 minutes a day. I think this is probably the best way of trading Bitcoin anyway, because the spreads are very high. I think you need to drill down to a 4-hour chart. And pick your spot. Now I've got a MACD here. I'm a big fan of MACD because I think it's very sensitive to to potential to reversals. For example, if you've got, let me see if there is one here. Spend a quick couple of minutes on why I like MACD, and then we'll move on. If you've got a situation where you've got a new low in the market, here's a good example. So here we were at, the low was 10,826, and then we get another new low here at 91.36. But look at the way the MACD is behaving. That's divergent. So as Bitcoin was coming down in this period, at the point in which we actually get a buy signal, the MACD was divergent. So the MACD made a higher low as the market made a lower low. So they did the opposite thing. That's a sign of a reversal. Confirmation of the reversal is there. New low in the range, and then close above the very next bar. So at 8 o'clock in the evening on January the 17th, this confirmed a short-term reversal pattern. Now, it shows you how difficult Bitcoin is to trade, because normally if I'd have seen that, I'd have said, right, put an order in the book, put an order out in your account for 10,000 and keep the stop under 91.50. It doesn't pull back until, so that was triggered on the 17th of Jan. It doesn't pull back until the 23rd of Jan. So it pops up without any pullback, and then finally drops back to that level. So that was Wednesday, so 6 days later, 6 days later you get the entry that you need, but you only get a small move before it hits resistance and then just rolls over. So what was basically happening at that point, it doesn't quite work, does it? You hit a resistance point up here, just breaches above it, and then it drops. But you can see the structure, the triangular, the sort of symmetrical patterns you get in this. And these are typical patterns that I would trade on this instrument and other instruments. And look, it's interesting where we are now, because that was a buy signal on 17th of January, pull back on the 23rd, and here we are back up here right now on the 15th of Feb. So I think this is actually a good place to short at the moment. This is potentially a good place to short Bitcoin, to sell it, because this is a key pivotal resistance. Markets, the first test of a big number like this, I think will sell. We're slightly above it at the moment, so I wouldn't do anything with it unless you get a lower close in this chart, and then I would try and I would offer out, in other words, put an order in your broker's account to sell at 10,000, and I'd have a stop at least 10,380. So it's quite a hefty stop, and then you need to see if that breaks. If that breaks down, then we're coming down potentially quite fast, and we could hit 60 again. 6,000. Now, I said in the weekly chart, if we closed above here then I suggest you buy a pullback. So if the weekly chart is good, that's potentially your pullback, your buy area, 88.95. So to cut a long story short, what I'm saying to you is line your charts up with support and resistance, work out where the key pivotal areas are, and then trade it. So if you're a part-time trader trading a 4-hour chart is a really good chart to trade because you won't get that many signals. That's the point. The smaller time frame you get, the more signals you're going to get. So if you want to scalp, that's great. If you want to trade for 1 or 2 hours, maybe half a day, a full day, and then just get out of the trade, then use a smaller time frame. If you want to if you're working part-time or full-time and you can only look at your screens once or twice a day, this 4-hour chart is definitely the chart to trade. So here on the 6th of Feb, you get a buy signal at 12 o'clock midday, and in this case it does pull back. That 64 is a very nice place to enter with a stop under 59, 5,900, and then see if you can get back to resistance. And you actually get there fairly quickly. So that was the 6th of Feb. So even the next day you get a small run. So like I said, if you're going to swing trade this and you get a higher close on Friday, then this 90.80 could be a good place to get in. Okay, so am I bullish or bearish overall? Would I buy or sell this? Yeah, like I said, I would buy this if I get the right signal on the close on Friday. I actually think it's quite good, easy to trade at times. The bigger the bars, the more volatility you got, the harder it is to trade. And this was really volatile here. So unless you knew that was a sell signal up there, it was quite hard to ride that down. And you could potentially, you could short that, you could be right, but if your stop and your account wasn't big enough and your stop was too close, you could have got taken out for a loss. Longer term, okay, let's look at the bigger picture then and strip all this back. Right, what do I think this is going to do? I think that we have had, we're currently still in the midst of a downturn. So we've had 1, 2, 3 waves down. Once we got the sell signal here on this bar, we're getting a 4th wave up. So I think if we hit that area there, I'll identify that area in a minute. I think this could create the next wave 5, which could be quite impulsive. So I think the real telltale indication on this chart is what happens at that point. 12,000 is going to be mega. So assuming we get through 12,000, that's going to be the next. 12,000 can be really tough, I think. And 12,600, obviously not far off it. So, I mean, once we closed, so we hung on there on the 15th of Jan, and then very next week confirmed that main area was going to fail. So I think anything that comes back and touches that now is going to struggle. So in terms of weeks and months then, I think we are going to take potentially 2 to 3 months to get up here, potentially. And then at that point, midsummer, when you might see a lot, traditionally markets tend to be lower volume and weaker, then I think if we're up here sort of early summer, midsummer, I think we might then roll over at that point. Will it hit 20,000 again? Personally, I don't think it will. But on technical terms, if we close above 12.5, 12.6, yes. The only thing, the thing that could really change this whole market is if it needs an event, something like a big somebody, an organization, an institution, or a central bank or something that is prepared to take Bitcoin on and Bitcoin becomes mainstream. That's the problem I personally got with Bitcoin at the moment. It's not mainstream. It's caught the imagination of the public. Some of the big trading houses like the CME, Chicago and Mercantile, have started offering futures contracts on it. So it's become mainstream on one level, but not mainstream on international trade and general acceptance. So this is a very technical chart. So if it's very technical, what does that tell me? So when this is the low and the high I've taken the Fibonacci from. So the fact that we held this at the low means this fib chart is probably one that the market is sticking to very, very clearly. So close above here and you buy 94.64 next week, you could potentially see 10,700 next week if we close up here and you were able to get in at that point. So that 50% is the next target level. Close above that level there, then you can expect to see 12.7. And only if you close above 12.7 will you potentially get up there again. Only. But to me, if I shrink that up, I just think I think people are going to get bored with Bitcoin. I think a lot of people are losing money on it because it is quite difficult to trade and the spreads are so high. So unless you are a really canny trader and you've got really excellent trade management skills, I think a lot of traders could be losing money on it. But that's a very, very technical chart, and so these are the levels you need to watch from, taking into account this July low and what's this November, December high. So all the time we stick to these fibs, you should be able to plot the next move in this. Like I said, close up here, that's a buy, and that's your target, your first target. Close above this target the following week, and then that's your next target, 12,800, give or take a few pips. And then that is the big decision maker. That is the big game changer. at 12,800. Does that make sense? I don't know how technical everybody is in the room. Let's go back to, if you're a day trader, so I've talked about if you're a part-time trader, use a 4-hour chart. If you're a day trader, one way you can do this is to drill down to a 1-hour chart. Now, if somebody said to me, you're only allowed one chart, you can only ever use one chart, one time frame, Mike, what would that time frame be? It would be a 60-minute chart. So this, at the moment on the screen, I've got a range from, let's take this high up here, 28th of Jan, and this low here, 6th of Feb. We've had quite, so here's the downtrend. And you can tell it was beginning to find some buyers. The fact we couldn't meet down here at 5,000 suggests that this once you did get the buy signals up here, that was quite strong. The fact that we couldn't meet that trend line down there. So how could you tell it was a reversal? You could tell it was a reversal by the way we broke out of that area there. It's not a very good funnel. So a good funnel to me has this sort of pattern. A much tighter area like this. This is quite a fat funnel. So in a good funnel pattern, these are very technical markets with very good patterns, you would see this bouncing in and around this funnel, gets very tight, may dip underneath it, then starts closing above here, and you buy a pullback and it starts to move up. This one is very, quite a fat funnel. So that wasn't, I don't think that was a very clear reversal, but nonetheless, like I said, the fact that it didn't hit the bottom of that trend line did show great strength. Another way of, so the main thing I would do is I would say to myself, right, if that is a major high and that is a major low, I would then stick the fibs on that range and then look for patterns above this area here. So this is if you don't understand fibs, I thoroughly suggest you go away and research it. Plenty of free videos and so on, and details about it. That's the inner zone. That's the outer zone. And that's the high and the low that I've taken to form this. So 3 price blocks, 3 price areas. So if this chart was holding this zone here and closing above that zone, you know that's probably very strong. And the chances of that closing higher are good. So we get a 1, 2, 3, 4, 5 move up, a 1, 2, 3 wave correction, a 1, 2, 3, 4, 5 wave move, 1, 2, 3 wave correction, 1, 2, 3, 4, 5. So you get this general sort of wave of buying and selling there, and then you finally get this breaking up as the market gets an impulsive move. So what the most crucial aspect of this chart was the way in which we got higher lows. And when we broke, look, we touched the 50% on the Saturday, 9 o'clock in the morning, on the 10th of February, we hit that fib high right on the button. And you can see there's lots of people have targeted that for their profits, because so many people jump out and take their profits that we go underneath the trend line. And then we start the whole move again. This time that trend line holds. We start selling again at the fib zone, but this time when we pull back, this gets bought, and we just run. So if you're an intraday trader, my suggestion is you trade this with fewer trades as possible because of the spread, but you look for these buy signals. So a lot of red, nice candle pattern there, nice candle pattern there, dips underneath it, we start getting a green here and here, and so on. So on the 8th of Feb, 9th of Feb, 11th, 12th, 13th, 14th, and then you finally break up today. So there's 1, 2, 3, 4, 5, 6, 7 trades in a period of a week. So roughly 1 trade a day if you are a part-time trader, or even if you're a full-time trader. That's the sort of setups you could have. And this looks as if tomorrow, if this continues, then 10,525 is a possible target. If it really gets going, it could motor up to 11. So if you're in this trade and it keeps going higher, get your stop to break even, or start to lock in some profits, but you've got to leave enough room for this to wiggle. Yeah, I was going to talk about that anyway. So that's that one. Let's come off to the Dow. You can see this is how I've marked up the Dow. I've marked it up in zones. I'm not going to go into detail about what these zones are because we'll talk about day trading first, and I'll quickly go on to the bigger picture. So you can see these zones have been really, really important. These vertical lines are the week breaks, the Friday closes. So you can see on Monday and Wednesday and Thursday we've had buy signals on my zones, and we're just coming up into major resistance now. It's a beautiful trade down there at 800. Bigger picture. So this is the Dow on the bigger picture, on the weekly chart. You can see I've already marked it up. So let's talk about what this chart may do. So 2 weeks, and then I'll tell you whether I'm bullish or bearish for the remainder of for the coming weeks and months. So nice little gentle move up. 1, 2, 3, 4, 5. 1, 2, 3, 4. That's not, I've not done that count very well, but you get the point. You get this gentle, little pullback to ball, and then we get an impulsive wave up, followed by 2 weeks slamming down. And when we slam down, we come right into the 50% of this move. So in 2 weeks, we retrace what took 6 months. 2 weeks selling takes back half of what we made in 6 months. So if you get these charts right, now to me, this is a bit easier to trade, because for several reasons. The spreads are much tighter, and I think it's a much more technical. I think it's probably more technical than Bitcoin, and less volatile. When you've got smaller increments up here, it's much easier to trade than the sort of wild increments you get in the Bitcoin. So, okay, big picture. Two, huge downdraft, flash crash down to the 50% fibs at 23,120. Close above this zone here. If we stay above this area, we hold 25,000 into tomorrow. This is a weekly chart, so this bar obviously closes tomorrow. If that happens, then 24.6 is a buy, and we could, or ideally 23,900 will be a buy if we just give this the chance to really sort of retrace back to this support. Then I think we can eke our way in the coming months up to about April, May, maybe into June. We might be able to make our way back. And if we then fail at this point, 26,600, then I think we really had it. I think the US are looking at 4 to 6% GDP this year. That's some predictions some people are making. So this could be a very welcome pullback. So if one of these areas here holds, I think we can bump into this area here, maybe come back, and then potentially stretch our legs up here to 28.5, and who knows, 28.5 is probably the limit. If we then sell at that point, I'm bullish into 18. I'm bearish into 19. Maybe we peak above here and then start to wait and to really weigh down. I think 10 out of the last 13 interest rate cycles, have resulted in recession. We're clearly in an interest rate cycle. Money flow, money supply is already being restricted. We've potentially got the ECB pulling away stimulus in September, and the Fed are close to another rate rise, and potentially, I think we'll finish the year on 2.5%. We're 1.5% at the moment, so another 2 rate rises is my guess. And I think the economy will do well, but eventually overheat, and that could be the overheating level at 28,500. So I think buyers have stepped in. Could see a little bit more downside, but ultimately we'll come and test the upside, drift lower, and then make a run for 28.5, and then into back end of this year, early next, I think we'll struggle and potentially then have problems. That's my read on the market. That's a really good question, because the Nikkei as Abenomics have done wonders for the market. That's my technical take on the Nikkei. That's a much more severe drop, isn't it? Their sovereign debt is a amazing level. So Abenomics has stoked this up, but wow, they've got serious problems. If this closes below this level, this support level here, wow, we are potentially looking for a bloodbath. I think so. The eyes are on the Bank of Japan at the moment, waiting to see if they are going to extend their stimulus program, and they're going to rely on China staying stable, which at the moment it is. So I'm the most bullish on the US market. If I had to choose between European indices, Asian indices, and American indices, I would definitely go with the American because of the American Trump's tax cuts, his massive plans for infrastructure, and the weakness in the dollar. That's what's keeping the US economy growing at the moment, the weakness in the dollar. So that's in answer to your question. I'm much more bullish on the US than I am on Europe and Asia. This could be the real sort of linchpin of the global economy, though. If this can't hold here, then watch out, because everyone's in serious trouble if this goes, because this could have a ripple effect on the economy. Okay, so I'm short-term. So, okay, to sum up, I'm short-term bullish on Bitcoin, anticipating the US will turn these markets around some stage this month or early next, and then run into the usual May-June period. But just concerned that overall it's all going to rely on this Nikkei surviving and holding up here, because this is a really feeble reaction to that horrendous drop. So that could be a linchpin. You can see just, I mean, this dollar is amazing. This is the dollar versus US dollar yen. Again, another really good technical pattern. Yeah, I think if this drops further, this could create a lot of issues for Japan. Let me draw that a bit clearly. Actually, I think that's not quite drawn that accurately. Yeah, we're right on the line there. Anybody in the room? What's your take on? Are you bullish Bitcoin? Are you bullish Dow? What do you anticipate for this year? Anybody? Okay. No. Let's have a look at the Nasdaq. I mean, I do think the Nasdaq is, to me, what the Nasdaq does, the rest of the market follows. So whilst I'm keeping a really, really close eye on the Nikkei, I'm keeping an even closer eye on this Nasdaq. I mean, wow, if this Nasdaq closes up here, that bodes really well for the US markets. So I've fibbed this from, in fact, I would like to redo that. We just, let's just fib high and low 2017. Let's see where that leaves us. Yeah, look at that. Very beautiful pullback to top of the zone. That's the main fib zone. Very, very technical move. So we breached the 127 extension. So that was a really, really decent run up there. So if we close here then and get a pullback to 65.30, I'm not sure we're going to pull back that if we close that well. This could be heading for 75.50 and ultimately 82. Okay, any more questions? Because I'm going to leave it there for now. I'm going to set up a face-to-face, and I've just sorted the venue out. So I'm going to do a proper full meetup where we can all chat and exchange ideas. I was looking at the 1st of March. I think I'm going to have to go into further into March now. So I hope you guys are going to come along to that, and we'll have get some guest speakers in as well, and have a good time. Any questions? Anybody got? It's good questions. Thanks for your questions, everybody. Very, very good questions. I rely on you probing me to expand the conversations. That's great. Thanks for that. Options expiry tomorrow, so I'm expecting the Dow to hover around the 25,000 mark tomorrow, and that's a question of if the bulls can take hold of it after the options expire and drag it up. All right, no more questions coming in. So if you want to copy this recording, let me know. Email me or tell me now if you want to copy the recording, and I'll make sure you get a copy. And I think I've got all your email addresses anyway. And I will leave it there. So no more questions coming in. So I haven't eaten yet, so I'm going to go off and get something to eat. And look forward to hearing from you. If you want to go on my newsletters, then again, tell me, and I will put you on the newsletter list. Otherwise, keep your ear close to the meetup page, and I will be sending you details of some ideas I've got for other meetups. All right, thanks a lot, guys, and I will hope to see you, meet you face to face. Bye for now.